On Friday night at a rally in Pennsylvania to celebrate his approval of Nippon Steel's acquisition of U.S. Steel, President Trump announced he'd be doubling the tariff on imported steel from 25% to 50% effective this Wednesday. Later that night, in a Truth Social post, he said he'd do the same for aluminum. That news sent both groups of stocks soaring today. Cleveland Clips up 23%, Century Aluminum up 21%, Cramer favored Nucor up just over 10%. Buy! See, unlike the so-called reciprocal tariffs announced on Liberation Day, the president has a clear justification for these steel and aluminum tariffs. The higher tariff on steel should do two things. It will make imported steel less competitive versus domestic steel, and more generally, it will allow our producers to raise price. All else equal, that's terrific for the steel mills and for you if you're a shareholder. Remember, tariffs on imported steel are not a new thing. President Trump first imposed a 25% tariff on steel and a 10% tariff on aluminum in March of 2018. President Biden mostly kept those in place, though he exempted a couple of trading partners, mostly notably the European Union. Then earlier this year, Trump reimposed the full 25% tariff on steel, essentially getting rid of the Biden exemptions, while also raising the tariff on imported aluminum to 25%. Those went into effect in March, although a few weeks ago we gave the UK an exemption as part of a broader trade deal. The justification here is that some of our trading partners subsidize their own steel producers, and then they dump that merchandise in the rest of the world at low prices, crushing our domestic players. It's true, people. It's true. Take Cramer favored Nucor. This full tariff era has been very good for Nucor. This stock was basically dead money for years after the financial crisis, but after Trump's tariffs were imposed in 2018, Nucor even eventually rallied from the low 60s to over $200 at its highs in April of last year. Since then, the stock's pulled back hard, but now it's mounting a comeback. Why? Because this 50% tariff is a bonanza for American steel producers, and Nucor's the best of the bunch. Just this morning, analysts at BMO upgraded the stock from market perform to outperform, both because of the tariffs and also because they think the stock's just gotten too cheap. All the growth projections, they got so many projects in the works, it does seem cheap. So, yes, it makes sense that the stocks rally on this news. But, and this big but, I'm not sure if the tariffs will help the business immediately. And more important, higher tariffs by themselves are not a good enough reason to buy the stock. I do not recommend paying up here. I'd rather wait for an opportunity to buy Nucor on weakness again. What makes you want to be cautious here? Well, just take a look at what happened with Nucor after a few of the previous steel tariff milestones. The original Section 232 tariffs were imposed in March of 2018, and it took a long time for Nucor stock to see any benefit. It gradually slid over the course of 2018-2019. Now let's look at Nucor's chart over the past year. Now, there were a couple of times when the stock popped during this period. In early November, it jumped 16% the day after the election, as investors bet that Trump, too, would give us more steel tariffs. But there was no follow-through. The stock shot up to 170 that day, which remains at its 52-week high. But by the end of December, it was back down at 116 and change. The thing got going again when the new year began and when President Trump announced that he'd cancel Biden's steel tariff exemptions in February. Nucor shot up 5.6% in response. But after a few days, the stock rolled over, falling more than 40 points overall from its highs in mid-February to its lows in early April. So why hasn't Nucor been able to hold on to its gains from positive developments in the past? Simple. While tariffs on imported steel are certainly helpful, they're not the only thing that matters to this business. Back in 2018, the imposition of tariffs was nice for Nucor, but that came right in the middle of a Fed tightening cycle, right before Jay Powell got very aggressive with the rate hikes. That put a damper on economic activity until Powell started cutting rates again in 2019. Same deal with some of these more recent pops. Nucor's stock collapsed into the end of last year, giving up all its post-election gains and then some. In December, the Fed decided to pause its rate-cutting cycle after just 3 cuts. That pause crushed anything economically sensitive, including the stock of Nucor. The smokestack stocks are always hostage to the Federal Reserve. And honestly, the steel tariffs themselves are a mixed development for Nucor, in the sense that they put upward pressure on steel, which is good for Nucor's average selling price, but not necessarily good for demand. Consider hot-rolled steel, one of the many types of steel Nucor sells. At the beginning of 2025, the price of hot-rolled steel was $709 per ton. Now it's $884, including a $44 increase today. Maybe some construction projects make sense when hot-rolled steel is at $700, but then maybe not as much sense at $900. So steel tariffs, they're a double-edged sword. I still think that all else equal, They're a net positive for American steel producers, but all else is not equal. In addition to the steel tariffs doubling, the aluminum tariffs are doubling too. We've also got a 25% tariff on imported cars, 30% duty on anything from China, 10% duty on merchandise from any other foreign country. And that's assuming that the crazy high tariffs announced on Liberation Day don't go into effect on July 9th, when Trump's 90-day pause comes to an end. Do not get me wrong. I very much support these steel and aluminum tariffs. I salute them. They aim to defend our producers against foreign dumping, and we know that tariffs are a great way to accomplish that. But just because I support these tariffs as a policy doesn't mean they're a good reason to buy Nucor or any other steel maker. The earnings outlook for Nucor, which is what the stock price is based on, depends on a couple of factors. And while steel tariffs are good for some factors, like the price of steel, they're bad for others, like aggregate demand for steel at higher prices. So here's the bottom line. Yes, tariffs on steel should be good for Nucor in a vacuum, but we don't live in a vacuum, people. There are other forces at play here. I'd be much more bullish on Nucor going forward if we just got some clearer signals that the overall economy is doing better and that there'll be more demand for building things like cars, homes, and generally more macroeconomic strength. All that's more important to Nucor stock than incrementally higher steel prices, courtesy of these tariffs. Mad Money is back after the break.
Coming up, you've heard the phrase, sell in May and go away. But just because it's catchy doesn't mean it's true. As the summer season kicks off, Cramer reveals whether the saying holds water. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.